Hello guys, welcome to the Wednesday trade recap and forecast. So let's get started. We're starting with the euro and US dollar, and I did have one trade on this pair. It was a 3.5% winner. So let me go through the trade, basically the reason why I took it. Or actually, let's see the pair price action as well. So the pair price action was ascending right here, and I was definitely looking for the price to reverse to the downside. So the last recap was around here on Wednesday, and I was speaking that this can reverse. It did. We got some momentum. I did have my pending sell limit right here on this inside bar for a break and retest trade because I was seeing ascending channel, strong momentum, 2 candle pullback, no momentum shift, and we continue. I was not tagged in. I then removed the order. Price continued down even more. We got a clean close. At this point, I wanted to see a slower pullback to the entry area or a flag formation. Then a flag started forming and there was no entry candle, but the entry candle was right here. So this was the entry candle. I believe it's bearish. Basically, here is the flag formation. First low, first high, second low, second high. Did I take it on the flag or did I take it on the break and the retest? So I actually took it on a third type of an entry which my friend developed. It's basically connected with time zones, or not time zones, but so trading sessions. So you have the London session, the Asia session, and the New York session. I do not want to go into it, so he wants to keep it private for now. But basically, I took this trade on this sort of a timed entry. And I got in around this level, so around 1.05482. Again, I do not want to go into much detail. He wants to keep it private because of prop firm reasons and stuff like that. But basically, this is a refinement for the break and retest or the flag entry that enables you to get in on an even better price. So again, pair price action is the same. The only thing that's changed is the entry itself. So I got in around this level at 1.05481. I got in with a 12 pip stop loss and I almost got taken out. So price almost took me out here by, I believe, 2 pips or maybe 1.5 pips. But then it did drop to the downside. Now, if I was using the trailing stop loss rule that I usually use, I would have gotten out for a loss because my stop loss would have been moved above this line. So basically I would have gotten out for a small win, like a 0.1 win. But what I did, because of the Israeli and the Palestine war, I basically closed on the Friday evening. So I closed around 7 p.m. London time on a Friday, and I closed for I think 3.5% winner. So this time it worked. This time it went into my favor. Why did I close it? Well, I did not want to take the extra risk from the added volatility because of the war. So if there is like a war or some sort of a crisis or any sort of an event that can push the markets up or down and create large gaps, because we do know markets can open with huge gaps, and then you could be taken out for much more than you risked initially. So to avoid that risk, I actually closed Friday evening and it ended up being a winner. If I kept the trailing stop loss rule, I would have been taken out up here, and this time I did get lucky. But again, what could have also happened on the Sunday open, right here, this was the open, we could have opened and then dropped to the downside like this, and then I could have missed out on 10 or 15% in profits. So you never know which way it goes, but my goal is to always preserve the capital, always be a great risk manager. So I did not want to risk price opening up here and taking me out for a much bigger loss than I anticipated. Okay, so risk management is always number one. You never want to put yourself in any risky situations like during crisis, during wars, stuff like that. Okay, how long will I be closing on Friday evenings? Well, I will see how the situation develops. For now, I'm definitely doing Friday evening close instead of keeping the trade over the weekend. What is happening currently? Well, price is corrective. We are seeing sort of a descending channel going into this ascending channel. So I'm expecting more range bound price action. What I am looking for on the euro and the US dollar, I'm looking for a large impulse up or a large impulse to the downside like this. So basically this price action is range bound and I want to see more momentum, want to see cleaner setups, want to see cleaner momentum as well, and then I would be looking for a trade. For now I'm leaving euro US dollar alone. Euro Japanese yen, so no opportunities here. I was not really interested in anything here. It was looking very corrective, very range bound. There was a flag that formed here as far as I can see. Yeah, so this was a flag. I did not take it. The reason is this impulse was not enough for me, and also I saw a bit of a momentum shift in these legs as well. And it was the Wednesday? Okay, Wednesday morning, Tuesday evening. It didn't really fit my plan. I wanted to see a bit better price action. Also, price action is just very, very range bound. Okay, so Euro Japanese yen for now. Let's see what current price action is doing. Yeah, stuck between the high and the low, and I'm looking maybe this continues trending up. Then I would be looking to buy. So maybe we get a nice established trend like this. That would be very interesting, and that would be very high probability to be a buyer. Okay, so that's it for EJ. Let's move on. Aussie US dollar. I did take a trade on this pair as well as the euro US dollar. Let's analyze. So I also saw a bit of this overall ascending channel. It was corrective, so breaking the highs, breaking the lows. Not the cleanest of the channels, but again, a channel nonetheless. And then I saw a really, really big, large impulse going down, really strong bearish momentum, after which I was definitely looking to place a sell order. This is a very high probability pattern, so ascending channel, and then nice strong momentum going down. Usually it starts a nice downtrend. Okay, a flag did form, we got a bit of a wick, and then another wick, after which the entry formed right here. So this was the entry. I took it on the regular flag entry. I did not use the third type of a time or a session entry. So it's pair specific. That sort of an entry is pair specific. On the Aussie US dollar, I just used the two main entries. Okay, why did I take it? Was I concerned about the wicks? No, I was not. So if I squeeze the price a little bit, they were kind of big, but I was not really concerned because of the price action. So I really like the ascending and the push down. This bearish momentum was really, really clean. So yeah, I was happy to take the risk here. Was it the best of trades? Could have been a bit better, but I would take this trade again. It did fit my plan, and it still fits my plan. So I'm happy that I took it. It did end up being a 1% loss. So I got taken out right here with a 12 pip stop loss. I think it continued down a little bit, but yeah. So this was a loss, and now we are creating this ascending channel right here. Let's delete this. Now we are creating an ascending channel, also corrective, so breaking the highs, breaking the lows, breaking the highs, breaking the lows. Not the cleanest of channels, but I would expect possibly the price to reverse to the downside. If a reversal happens, I will look to sell and get in on a nice downtrend. So let's look for that reversal or look for an impulse up. Then I would need to see a large impulse and possibly an uptrend. Then I would look to buy. So this pair is on my radar. It is on my watch list. Let's see if it does reverse. What the Aussie US dollar can do, it can have these push down, ascending, drop, ascending, and drop. So I have seen that happening on this particular pair. Let's see if that happens. So it is interesting. Aussie Japanese yen, there was a flag opportunity that you could have taken right here, I believe. So let me see if this candle is bearish. Yeah, it's bearish. So same sort of an analysis as on the Aussie and the US dollar. I was seeing this ascending channel right here, and basically then price reversed to the downside. We got some really strong momentum going down. So again, a high probability pattern to sell. and on the bottom we basically got a bigger wick than on the Aussie US dollar. So this wick was definitely larger. This wick was definitely larger, and also we got a bit of a momentum shift as well in these two candles. Momentum was definitely shifting to the upside. The entry candle was right here, so I did not want to take the 1% risk on this trade. And I believe it would have been a loss as well if I took it. Let me see. 12 pip stop. Let's see, okay, it would have been a winning trade. Did it break the low here? No, it went up. It would have been a small winning trade, but again, just did not fit my plan. These two wicks were too big. This was definitely a large wick. I wanted to see a range. I wanted to see a flat range because of the large wick, which we did not see. Instead, what we got is we got a momentum shift to the upside. So this was looking worse than the Aussie US dollar, and I was not happy to risk the 1% on this particular trade. Current price action looks ascending. I'm seeing an ascending channel right here. Corrective as well, so it's not only breaking the highs, it broke the low here, then it continued breaking the highs, so it's not looking that bad. I am expecting this sort of price action to reverse to a downside. Let's see if the ascending can clean up a bit, something like this, and then we can get a nice downtrend and start selling on the downtrend. So same as Aussie US dollar, this pair is on my watch list as well. I'm seeing this ascending structure and I'm expecting a downtrend, looking for a sell. Again, that's not the rule. Anything can happen. We can get a push up. If we do get a impulse up, I will look to buy. But again, most of the time when you see an ascending channel, price actually reverses to the downside. Pound US dollar, I was not looking for any setups here, so we had sort of a similar price action as Euro and Aussie US dollar. Ascending structure, impulse down, but then on the bottom, if we zoom in a bit, we actually retraced and broke the low, which is something you do not want to see if you're looking to sell. That signals weakness. So then we just started ranging around in this flat channel. Pound US dollar is currently very, very flat. I'm not looking for a trade. I'm not looking for a setup just yet. So this pair is not on my watch list. I want to see cleaner price action. I want to see price give me a large impulse up or a large impulse down. This is just very, very flat in this general area. Okay, so that's it for the pound and the US dollar. Then we have the New Zealand and the Japanese yen. Was I looking for any setups here? Yes, I was. So there was a couple of opportunities. Again, let's go over the price action quickly. Here I'm seeing this ascending structure right here, after which I do expect the price to drop to the downside. Then you might be wondering if I was looking for a sell here. Did I have my order on? And I did not have my order on. The reason was I liked the prior momentum, but then we got this large wick down, large wick up. This candle signaled a bit of a range-bound market, and the break was not enough. So we just kept breaking and printing wicks. What I wanted to see a nice break like this with a nice clean close. This break was not strong enough, so I did not want to take the risk. On that one, here, did I have my order on? No, I did not. For me, price was slowing down a little bit, creating a descending channel. And also another reason, I did not want to take a straight engulfing entry. So for the price to reach my entry level, it would need to show me a nice fat blue candle, which I did not want to see. Okay, what happened then? Well, we got the fat blue candle, and this would end up being a win, I believe. Maybe, let's see. Yeah, so this would end up being a nice winning trade, but it just did not fit my plan. Descending and this momentum shift, I would not take this trade, and I did not take the trade. So will I take it in the future? No, I would still not take it. I don't think it's worth it on a large sample size. Current price action on the New Zealand Japanese yen looks flat, looks range bound. I'm waiting for a large impulse up or a large impulse to the downside. So like this. Oh, large impulse up or a large impulse to the downside like this. currently leaving this pair alone. So let's quickly recap. Had a nice winning trade on EUR/US dollar. I got lucky. So with the stop loss and with the trade management, I got lucky. I closed it on Friday evening. Is it on my watch list? No. EJ, no. Aussie/US dollar, yes, I'm seeing an ascending channel. Aussie/Japanese yen, yes, seeing an ascending channel, expecting a reversal. Pound/US dollar, no, very flat. New Zealand/Japanese yen, not on my watch list, it's looking very flat as well. So only two pairs have potential, AU and AJ. That's it for the trade recap and forecast. Hope you guys enjoyed, hope you took some value. See you guys next week, and good luck with trading. Looks like this month is giving us some nice opportunities. Again, some months will be slower, some months will be more active with more winning trades. This month looks to be very nice so far, so let's see what the rest of the month will bring us, and good luck with your trading.